So first, the key purpose of budgeting. First, it's for planning purposes. Planning is concerned with specifying the type, quantity, and quality of services that will be provided to constituents, estimating service costs, and determining how to pay for the services. This is especially important for government, right? Because government exists to provide service to their constituents, and most resources available to a particular government are derived from those who pay taxes to the government, right? And most taxpayers do not enjoy paying tax, okay? And if they're unhappy with the service received, they will be unhappy with their government. So in order to be a good government, right, especially when the money is not enough and a different department or different services are competing for the same money, okay, the budgeting is especially important. We have to make budget decisions as to whether the resource will be used to finance one program, right, against the other one, and how much services we need to provide, and therefore how much taxes we need to collect from taxpayers. So those kind of things are important. The budgeting has its controlling and administrating purposes. We know that budget can help ensure that resources are obtained and expended as planned. One of the key controlling purpose in the government accounting is we want to make sure that the revenues, basically resources obtained, will be spent properly. In fact, it's better to make sure that resources collected will be totally spent, and there's no deficits. The budgeting has its reporting and evaluating purposes. It's required that the GASB, the non-profit accounting, and government accounting, we have this budget to actual comparison. Okay, this comparison will reveal whether revenues and spending mandates were carried out. More important, when tied to an organization's objectives, budgets can facilitate assessment of efficiency and effectiveness. Next, let's talk about types of budget. There are several types of budget. First, let's appropriation, also known as operating budget. This kind of budget is concerned mainly with the current operating revenues and expenditures. And in government accounting, we just want to make sure that we have enough operating revenues to cover the current or operating expenditures. So this is usually it's annual or biannual budget, not a long-term budget. It's for current period, and this covers generally the general fund. Okay, general fund, we're going to use this type of budget, and other significant special revenue fund. Next, capital budgets covers a longer period, multiple years. This kind of budget focuses on the acquisition and construction of long-term assets. And for business type activities, we usually have this flexible budget, which relates to which relates cost to outputs and are thereby intended to help control costs. And these flexible budgets are also widely used in industry world. Next, let's talk about expenditure and revenue classification. Let's talk about expenditure first, because how they are presented or classified will determine how they will be spent. So expenditures can be classified by fund. For example, the general fund, right? We have or debt service fund. Then expenditure will be categorized by fund, or categorized by organization unit. Right? We can expenditures can be classified as police department expenditures, right? And fire department expenditures, right? Or by function or program, right? For example, by functions such as the general government or public safety or recreations, or by activities, right? For example, highway patrols or other things. These are by activities or by characters, right? Such as current expenditures, capital outlays, and lastly, could be most important, by the object classification. For example, these types of items purchased or the service obtained: salaries, right? Benefits, travel expenditures, repairs, and maintenance, right? We can see a lot of the expenditures are classified by object classification. So revenues are classified generally by fund, then by source. For example, revenues can be first classified by the general fund, then by how they're collected. For example, taxes, right? Licenses and permits. Okay, so we're going to follow these classifications to record the government accounting. Alright, this is an example from the City of Houston 2018 Budget General Fund. Let's see how revenues are classified. This is a real example. If you look at the right, this is revenue. It's classified by source. As you can see that the most important one is property taxes, right? The majority will be property taxes, followed by sales taxes and other things. Okay, it's by sources. And if you look at the expenditure, okay, let's see how Houston classified expenditures in the budget. Look at the it's a exception from the it's a very long 2018 budget, but we can take a look from this page. We can see that expenditures are classified by function. For example, this is for public safety expenditures. This is budget for development and maintenance services. And within the public safety budget, we have ranged by department: police, fire, right, emergency, and courts. We'll just take a look at the the police department. Then among the police department budget, right, it's classified by fund, right, general fund, special revenue fund. Okay. So the object classification budget is the traditional one, and could be the most common one. So what is special about the object classification budget? It is characterized by expenditures classification. Okay, we've seen that it's classified by, for example, salaries, supplies, those kind of things. Okay, and this facilitates control for sure. So if you want to have a $1 million salary budget, right, and $2 million supply budget, that's easy to see and to control. But it has its drawback. Okay, it discourages planning. Usually these supply demand, for example, are from the bottom. So each department is going to report how much supplies they want. Then they're gonna from the bottom to the top. Then the top manager is going to summarize, all the demand. And then gonna make a supply, for example, budget. But this discourages planning. Okay, it's not real planning. It's just summarizing the demand, and this is not a more efficient top-down. This is a low efficient bottom-up budget. This overwhelms top-level decision maker with details, too much details. Basically, they really don't care. Supplies or stationary budget, right? The top decision maker, they don't care, and which limits a post-budget evaluation. So, do we have a better one? Yes. We have a performance budget, okay, which is should be more efficient than the object budget. This performance budget supplement object classified budget. Why? It focuses on measurable unit of efforts, okay, services and accomplishment. As you can see, their dollar expenditures are directly associated with the outcome. For example, budgets are classified by public safety, right, and complete communities, and all these are the performance they want to evaluate during the year. And now we have a budget. So the budget is directly associated with the outcome, performance outcome. For example, 911 emergency call answered within 10 seconds. Right? This is the outcome we want to achieve. And we're gonna give them a budget to make sure this happen. Okay. So the most common type of performance budget is program budget. And then by the end of the year, it's also easy to evaluate. So we're gonna see the performance, whether we have achieved the goal, right, and the budget conditions, right. If we under budget and we didn't achieve a good result, we can give them more budget. But if we over budget, we still didn't achieve the goal, then we have to think about whether this is a good, the goal is realistic or not, or something is wrong, inefficient with that department. So the budgeting is not easy. It takes a quite long period to complete, which is known as a budget cycle. Okay, so let's take a look at what is budget cycle. From the very beginning, we're gonna start the preparations. Usually, it's right, the office of mayor. Then once it's prepared, I'm going to send it to for approval. Then once it's approved, sent back for executions. Then once it's executed, and by the end of the year, we need to have it reported and audited. We're going to start the next round. This is so-called a budget cycle. So in the government settings, budgets are usually prepared by the organization's executive branch, the mayor, the office of the mayor, for example, and then submitted to the legislative branch for approval, for example, city council. Right? When the budget is presented to a legislature for consideration, it is typically turned over to one or more committees for review. Right? At any levels, city level, state level, and federal levels, it's the same thing. So the committee is going to review and give a suggestion whether to approve it or not. Upon agreeing to the budget, a legislature officially adopts it by enacting an appropriation measure which authorized expenditure. Okay, so here we're going to see the appropriation, which means the money will be appropriated. Okay, at any level, there's always appropriation once the budget is approved. Right, once the budget is approved and there's appropriations and the budget is executed by an organization's executive branch, the mayor, for example, the mayor office, right? Then the expenditures are assigned or by allotments. Basically, it's divided the total cake into pieces, right? Apportionment. It's, for example, it could be a periodic allocations of funds to a department or agencies. So each department is going to receive its piece of the budget. Both the governments and non-for-profit should include in their annual financial statement or the supplementary reports important document called budgetary to actual comparisons for each of the funds for which they have adopted budget. Okay. The current GASB models requires governments to report their actual results and both their original and the final appropriated budget. So basically 3 columns are important. Original budget, right? Final appropriate budget, then actual results should be presented in the budget to actual comparison table for each funds that have adopted a budget. However, neither GASB nor FASB have control over budgeting principles, so we don't see accounting rules for budgeting. We don't see that. So This leaves the budgeting principles or the rules to the organization or government, okay, or the organization or government that supervises it. Therefore, we do see variations in terms of how different organizations record their budgetary accountings. Maybe the term will be different, but basically the methods, okay, or the principle behind it will be the same. The GASB recommends using modified accrual basis of accounting for budgetary accounting. However, many governments use a cash basis or modified cash basis for their budget. For example, they assign revenues and expenditures to the period during which the cash is expected to be received or disbursed. Well, typically, it's a cash. This is a cash accounting. And recognize taxes and other revenues in the year in which they are due, and not in the year in which they are expected to be collected. So what does the GASB say? Per statement number 34, the GASB requires that government present their budget to actual comparison on a budgetary basis and include a schedule that reconciles the budgetary and the gap amounts. Okay, so it doesn't matter if you adopt a modified accrual basis or modified cash basis. When you present the budget to actual comparisons, okay, you have to show a reconciliation there so people understand what you're talking about. Okay, as to how you're going to record your budgetary accounting, okay, you're going to make your own decision. All right, next let's talk about some of the basic budgetary accounting. First, estimated revenue. So estimated revenue is used to control and monitor the revenue budget. As you can see, typically revenue has a credit balance, right? But estimated revenue has a debit balance. For example, for this period, the government expects to have a $15 million revenue budget. Right? This is expected property tax for this year. Okay, then when the tax are actually collected, the government is going to have the actual revenues. Okay, and by the end of this period, the balance, okay, the estimated revenue balance is $11.1 million, meaning $11.1 million remains to be recognized. Okay, remains to be recognized. So this equals estimated revenue minus all the actual revenues. It's a very good controls for revenue budget. On the expenditure side, we have this appropriation. The ledger accounts for expenditure will have two extra columns. One is appropriation, this column, and the other is encumbrances, okay, this column. Now let's talk about how we're going to use these two columns to control expenditures. We know that appropriation is approved and allocated budget for each fund or each department. For example, this is required lab. This is approved budget for expenditures in total $300,000. Okay, so we cannot the total expenditures cannot exceed these appropriations. All right. Then if we actually spend money, expenditures is going to reduce the balance of appropriations. As we spend money, as you can see, the balance is reduced. So we have a number in mind how much we can use. Okay. Then we have these encumbrances, okay, which is a kind of commitment to purchase goods or service. For example, you sign a contract with a vendor, okay, then we have to reserve $15,000 to put money aside to pay for that contract, although we haven't paid them yet. This is called encumbrances. This is also reduce the balance of the appropriation. Okay, so by the end of this period, right, the balance, unencumbered balance is $165,000. So we know this amount is available for future spending. Okay, for future spending. Either you can spend it or you can sign a contract with vendors. So how do we get the remaining balance? It equals appropriations minus all the encumbrances minus all the expenditures. Let's see one example. A school district adopts a budget calling for a total revenue of $400 million and a total expenditure of $380 million. Okay. Then we're going to make the following journal entries to record a budget. Okay, to set up this budget, we debit estimated revenue. We have seen that estimated revenue has a debit balance. Right, this is a total revenues budget. We credit appropriations, so this becomes the this should be 390. Okay, not 300. 390. This becomes the expenditure budget. The difference between the revenue budget and expenditure budget is a budgetary fund balances. Okay, so if all these happens, okay, by the end of the year, we're going to increase our fund balance by $10 million. In business, this is a profit, right? But in government accounting, it's an increasing fund balance. So this records the estimate revenues and appropriations when we set up the budget. And this budgetary fund balance is a budgetary control account. So it's a temporary account and will be closed by the end of the period. And this account we always have a zero balance at year end. And some governments choose not to use this control account and just record a fund balance, but that's okay. So mix the budgetary fund balance with the actual fund balance. It should be absolutely fine, but it's going to it requires a better understanding of accounting, so just don't get confused with the budgetary fund balance and actual fund balance. So by adopting the budgetary fund balance, it's easier to do the accounting work, basically. Now suppose that during the year, both revenues and expenditures were as estimated. and all transactions were for cash. So, right, we collected the taxes, for example, revenues, cash, debit cash, credit revenues, and we paid all their expenditures, debit expenditures and credit cash. All right, so then by the end of the period, we're gonna close the budgetary fund balance. When we close, it's very easy. We're gonna reverse the journal entry we did at the beginning of the year. So we debit appropriations, we debit budgetary fund balances. We credit the estimated revenues. So we close the budgetary accounts. All accounts has been are closed here. Then we're gonna close the actual revenues and expenditures like we do for all the accountings. We debit revenues, credit expenditures, and we increase the fund balance, okay, $10 million. Okay, next let's continue to see budgetary accounting, encumbrances. We know encumbrances are unfilled orders, okay? When you sign a contract, when the order is not filled yet, we need to set funds aside to fulfill these orders for the period. Okay, for example, during the year, the government ordered goods and services for $3,000. Sign a contract, they're going to debit encumbrances and a credit reserve for encumbrances. The reserve for encumbrances is a assigned fund, okay, assigned fund. And we have seen different level of fund, restriction fund, right? Assigned fund. It's from unrestricted to assigned fund. So during the year, it received and paid $2,800 of goods and services. It expects to receive the remaining $200 in the following year. All right. So when the government received and paid $2,800, it is going to do two journal entries. The first is a payment, right? Debit expenditures and credit cash. We know that. The second is to reverse the encumbrances, because this part of the encumbrances has been finished, fulfilled. I'm gonna debit reserve for encumbrances and a credit encumbrances, right? As you can see, after we fulfilled $2,800, still the $200 is not fulfilled yet, and still it's assigned. The fund balance is still assigned, $200. The remaining $200 balance of encumbrances, okay, not the reserve, not the reserve. $200 balance of encumbrances will be closed at the end of the year, and in the next year, it will be reestablished. It will be reestablished. So let's see example. So this we understand. We're going to set up a budget, right? With debit estimate revenues, credit appropriations, and credit budgetary fund balance. We have seen that, so I'm going to move on quickly. Then the this is actual revenue received. On the expenditure side, they're going to debit encumbrances and credit reserve for encumbrances if they order goods. This is how it is paid When they receive the goods and they paid for it, they're going to do 2 journal entries. We talk about that. And incurred additional expenditures, which is not which had not been income branded, but that's okay. It's not budgeted. Still be fine. We're going to pay for it. All right. This is by the end of the period. We're going to close. We're going to close the budgetary fund account. Basically, we're going to reverse the beginning journal entry. And this is how we close the revenue expenditures. Now we have one more account to close, which is encumbrances. Okay? So our fund balances will increase 300. Fund balances will increase by 300. But if you look at it, revenue expenditures, we should have increased by 500 because 200. The 200 balance is assigned to the reserve for the unfulfilled encumbrances. Right, 200 is assigned. So the unassigned amount increased by 300. Right, this is the balance sheet we're going to see for the fund. Right, as you can see, we have the unassigned 300, we have assigned 200. The total fund balance is 500. And in the next year, we're going to reinstate the remaining balance of encumbrances next year. By doing these journal entries, we debit encumbrances, so we reset up encumbrances, and we're going to credit fund balance. Okay? Basically, this is from the unassigned balance. And when we actually paid, it's not $200, now it's $150, but the same thing with debit expenditures and credit cash, and at the same time, because we have complete the order. Although we pay less, but we have fulfilled the order, so we're gonna redo the encumbrances. The 200 encumbrances will be fully reversed. We're gonna debit reserve for encumbrances. So we remove reduce the 200 assigned fund. Okay, at the same time we remove the encumbrances. Now, together with this journal entry and the previous this one, as you can see clearly, right? The 200 fund flow from the assigned balance to this unassigned balance. All right, this is pretty much for lecture 3, the budgetary accounting. We do have a homework assignment. Okay, our first homework assignment is based on this lecture, and based on the very similar to the last example. This example we have seen here. Or you can take a look at the review problems in the textbook. It should be the same one, but our homework is still with a little bit small variations from the examples we see here. Okay, in terms of numbers or transactions, we do have some small variations, but the general idea will be the same. Okay.